Well, is the bond market over? That is the question, and the question really to us is, where do you put money? We think that the bond market, if it's not over completely, it's probably 90, 95 to 100% over. So whether you miss the last 2 or 3%, the risk-reward question is one that you don't probably want to play, because the amount of reward that you're going to get for being right is very, very small compared to the risk that you're taking if you're wrong. And we do think that it is time to look at your bond portfolio, shorten durations, hedge the portfolio, reduce your risks and exposure to bonds. The question is, where do you go? And that's the hard part that we have with the Fed doing what it's done. Short-term rates at basically zero. So if you're going to put the money in the bank, you're going to get basically zero. If you're going to ladder CDs, basically zero. Where do you go with the money? Well, one area that we're looking at is commodity-based holdings, so master limited partnerships. We also look at real estate investment trusts, publicly traded, because there's been no new building in the last 5 years. If you take a look at that, cash flows due to a short of supply is going to continue to drive up, so rental rates are going to go up. If inflation does come back, you have an increase usually built in with CPI, cost inflation riders, into rent. So therefore, you're going to be protected with your cash flow. And if we do have a shortage of building due to the economy continuing to get better, that should benefit with rising prices over the next 3 to 5 years. So we think making sure your real estate exposure is good and is brought back up to where it maybe was pre-crisis is a very good thing, or even above where it was pre-crisis. If you take a look at the real estate market is a lagging indicator, like stocks are a leading indicator. So if you look at it like a train going over a hill, the front of the train being stocks went over the hill, real estate followed, and now if stocks have come back for 6 to 12 months, especially since the election, real estate is still maybe in the bottom of that trough and starting to come back. So it's a good thing to look ahead and find where is the next asset class that's about to go up and one that hasn't fully recovered yet. We think real estate could be a good bet to put at least a portion of your portfolio.